3M maintains a global manufacturing presence with significant operations in China. That said, it focuses its China manufacturing to serve the local market, not primarily for export to other countries. And the company has over 80 manufacturing facilities across 29 states in the US, giving it flexibility to bring back production to the US if tariffs become too overbearing. So, with that risk alleviated, well, I should say diminished or decreased, is 3M an excellent investment for long-term investors at current valuations? I'm going to answer that question in this video here.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
A couple of huge factors have increased and diminished 3M's revenue over the previous decade. Starting with the COVID-19 pandemic, which was positive for the company's operations in how it served the market and the demand for the market at that time. Then, in the aftermath of the COVID-19 pandemic, there were some reductions in its revenue, but for the most part, that big decline you see in revenue from over $32 billion down to $20 billion was a result of a divestiture. And so that has the impact of lowering a company's revenue because you're siphoning off a piece of that company and selling it off to someone else. And that has the impact of decreasing revenue because you're comparing the new, smaller business against revenues from the prior year's larger business. And so that divestiture had the short-term impact of decreasing the company's cash flow from operations to sales numbers at 6.85% in the trailing 12-month period. Also, if you recall, 3M has been involved with several legal proceedings, and it's had to make payments as a result of those proceedings. So that's had a negative impact on the company's cash flow as well. But if we exclude those factors and we just look at the operations, organically speaking, they generate strong cash flow at about an average of 20-25% over the previous decade. It's a respectable number for a company with such a heavy capital expenditure. It's a capital-intensive business. It does its own manufacturing. It manages its own inventory and does the distribution. All of that requires a lot of capital. And so to generate a positive and very positive cash flow from operations to sales ratio in this kind of a business makes it more defensible, because if somebody else wanted to do what 3M does, there's a lot of moving parts that requires billions of dollars of capital, and that's going to dissuade competitors from trying to jump in and take some market share away from 3M. The returns on invested capital were also solid over the previous decade, averaging over 15%, and it's now returned to over 21%. Again, that big drop down and pickup you see is a result of the accounting of the company's divestiture and restructuring of its business. But at a return at investor capital of 21%, it compares very well to the company's relatively low weighted average cost of capital of 10.31%. So the return on investor capital to the weighted average cost of capital is a more than 2-to-1 ratio for 3M. This is my proprietary discounted cash flow model where I calculated an intrinsic value for 3M stock, and my conclusion was that this business is worth $172 today. That compares well to the current market price at $136 a share. So the company's 52-week low was $90 and the 52-week high was $156. So at the current market price, it's trading at a valuation that's closer to its 52-week high rather than its 52-week low. Now, when I measured the company on the forward price to earnings ratio at a forward PE of 16, it's near the higher end of where this business has traded at going back 1 year. Typically, when a company undergoes a restructuring, investors are a little more skeptical because those are hard to convert into quality results. It's a lot of moving parts, very uncertain. Sometimes you overdo one thing and underdo another thing. Investors prefer a business that's been humming along, no major changes in its operations. It's getting better and better at what it's doing. Its markets are growing bigger. It's taking market share. That's the kind of business that's more attractive than one that has just undergone a major restructuring where, let's say, they spent billions of dollars on an idea. That idea didn't work out. And so now they need to cancel everything associated with that idea. If that meant manufacturing facilities, hundreds of employees, maybe corporate structure with people reporting to each other, all of that needs to be realigned due to the fact that idea didn't work out. And so the risks associated with that kind of restructuring are higher, obviously, than a business that's just been doing the same thing for 7 straight years and just getting better and better and better at what they're doing. So understandably, a year ago, the business wasn't trading as expensively as it is today, after 3M has successfully proven that this restructuring is going well. And so the risks associated with the restructuring have diminished over the last year. And so I've had 3M stock rated as a buy for some time now. I last updated the recommendation on January 13th, 2025, and I reminded investors that I liked this business, that I liked it at the valuations that I saw it in January, and I'm reiterating that recommendation today. So I'm updating this stock, rating it, keeping it rated as a buy. Of course, risks are higher. I mentioned it does have international operations at a time when global trade barriers are rising. And so the risks are higher than usual. If those risks make you uncomfortable, you don't have to buy it at this current price. You can say to yourself, well, today it's trading at a price of $136, and I'm not comfortable with those geopolitical risks. So I'll put this on my watch list and I'll buy it if it falls to $125. And there's nothing wrong with that. That gives you a greater margin of safety to account for the near-term risks associated with the rising geopolitical tension. I'm excited to announce a brand new private Discord to our channel members at the VIP Discord tier. It's a great place to directly connect with me, ask questions, and engage with a community of like-minded investors. Spots are limited, so join us today.